Good evening. I'm starting this training, and I will want all of us to actively take notes of every point that I make here, and I will try my best also to make the video recording available so that we can watch it over and over and over for us to really understand. A lot of times, people really, you know, wants to make money, and even in this kind of economy that we have in Nigeria, people wants to make money. And if you're not now making the money, probably you are discouraged or disappointed that you are not making money. But the thing is that money does not fall easily uh, from the tree. Money does not fall easily on anybody's lap. The way you do business, and you have to sweat, you have to put into consideration so many things to make that business successful. That's the same thing you do with forex. You have to, make sure that you do everything that is possible to make it successful. If you are to establish a business, you know what you have to do. Apart from, do you have the interest in that business? A whole lot of times people are involved in a business because they hear that they make money in that business. They hear that, okay, that business is good. So they are not the originator of the business, and they have no idea or clue about the business. So all they had, okay, they are making money in that business. So, oh, it's a pure water business, or it's a toilet roll business, it's a snacks business, or eatery, and you want to go into it because you think, oh, you are going to make money from it. Uh, Business is not like that. You really have to do your findings. Number one, do you have flair or passion for that business? So if you must first have a passion for a business. Is that okay? It's like you find yourself in a art class or commercial class or science class. Do you even have it within you to be a science student or a commerce student? So it's pretty basic that, do I really like that business? Do I have passion for that business? So whatever you have passion for, you are going to really dig deep and drive to make sure that this thing is successful. So it is also with Forex, because you must have passion for it. You are not looking for a shortcut to make money. You're not going to get that in Forex. And when you are starting a business, there are so many factors which of course you have to consider. You have to consider what kind of business, how do they do, is it seasonal or off season and all of that. Where do I locate this business, what are my target audience, who do I want to target, those I want to target, and a whole lot of things that you put into consideration, the risk involved in a business and starting the business, the look at everything all together, the staff that you're going to get, if it's one-man business or like a three-man business or five-man business that you want to do. When you take all these things into consideration, now where you sit the business, the warehouse, or it's a building to conduct that business and everything about it. These are the things that we do uh, uh, to actually start a business. You put all those things into consideration before you now begin to say, what is my budget for this business? What is the capital that I'm going to invest into this business? And if I invest this capital, what are my projections? How much do I think is going to come in from this business? And what if in the first year I have a business and I have some staffs and I'm not going to make enough money to be able to pay them because I've not had, a customer base? So these are things that happens to any business. We go through these things. Those who have business, before you now begin to grow the business. So you start from the scratch, then it's climbing, the graph is, moving up, the slope is going up, and, and that is how to, uh, vision a business and how to nurture it until it grows. And it gets to a point that, okay, yes, I think I'm making it in this business, and I'm having money, or returns coming in. So it is with Forex. A lot of times, if your approach is that you want somebody to give you signal, and this signal, if they say is starting from point A and it should end in point B, and you put in your stop loss, your take profit, and your entry, be it pending order, be it anything, and you think you are cool with that, it's not going to work. Business is not as smooth as that. You know yourself that it's not as smooth as that yourself. So you don't put a certain amount of money, and your expectation might be that, okay, I want this yield. Well, will that yield come? You're not sure. It's like you plant a cassava or yam, but when you're planting your cassava or your yam, all that you can tell yourself is that, okay, a yam can have like 6 tubers under a heap. It can have like 4, it can have like 3, it can have 2, it can even have 1. But the number at the end of the day, it's until you dig the heap, you dig it out to actually count, oh, we have 2 tubers, we have 3 tubers underneath. Oh, it's just 1 long tuber that we have underneath. You can't just decide, oh, it's going to be 2, it's going to be 3. But at the end of the day, but you should have done what you're supposed to do by making a good heap, by making sure that the soil is okay, by making sure that you water and you put in the yam and all of that, and by also making sure that you don't have rodents, coming in to dig and begin to eat the yam. And when that happens, they won't even allow you to shoot, talk less of, growing. These are things we do when it comes to Forex. You must also invest time and energy into Forex to understand how it operates, to understand why there are so many uncertainty about it, and what you have to do to navigate, and be successful in Forex. And when we give signal, it doesn't mean that the direction has changed. It doesn't mean that. But a couple of things will happen, in the market, which we must be prepared for. It's only when you know it that you will know that, oh, this thing is bound to happen. And how do I prepare for what is likely going to happen, even though the direction might be correct? So if you don't prepare yourself to enter or for that thing that is going to happen, then you are knocked off. And after you are knocked off, the trade begins to move in the direction that is expected, and you now begin to wonder, is as if, okay, they are watching you, that, okay, they want you out, and, they don't want you to come on board with them. Yeah, maybe they don't want that. They don't want you to come on board with them, but you are as limited as your knowledge. So when you know that these people don't want people to come on board with them to destination, and when you now have the knowledge, you know what they can do. And when they are ready to move, that is when you want to move with them. So a lot of times we don't even know what they are doing and when they are ready to move. And even when they're ready to move, they will still do a whole lot of things to frustrate you. This is normal with Forex. So you don't enter Forex and you put in the thing and you say, expect that, okay, within 3 days, within 2 days, you should get to destination. That is not Forex. Forex is, it's a waiting game, move up and down until, it gets to destination. It's as simple as that. So that is what Forex is all about. So we must know all of that and how to, navigate. So I want to take this plain chart and now begin to dig into how to study. I did some brief and some online training weeks ago on wave analysis, Elliott's wave. You know, we talk about the motive wave and the corrective waves. We talk about the motive wave divided into, 1 to 5. And we have, of course, in the 1 to 5, we said wave A, and with 1, with 3, and with 5, they are impulsive wave, and with 2 and with 4, they are corrective. And when you understand that, then you cannot understand how the Fibonacci works with the wave, and why is it that, oh, it is wave 2 that will operate at 61.8 Fibonacci of wave 1, and not 50.0 Fibonacci, and not 38.2 Fibonacci, that it is actually 61.8 of wave 1 that you expect wave 2 to retrace to. And likewise, when you're talking of wave 3, you know that wave 3 has to be an extension of wave 1 and wave 2 to at least 1.68 extension. So these are things at least. So for you, when you know this principle and you are working with motive wave, then within the extension, you tell yourself, at least I will get to 1, then get to extension of 1.68 before you decide if the thing is going to continue further or not. Then when you end wave 3, you know that wave 4 will be a retracement of what? Of about 38.2, retracement, fib retracement of wave 3. So then, of course, you now want to get wave 5, you know what fib extension that is going to be. So these are things that helps us to understand, even if the ultimate direction is is towards, upward or bullish, but there are things that will happen that will make the price go down, and to what extent the price could move so down, and you are prepared for it because you have the knowledge. Then when it comes to corrections, we have so many corrections we have talked about. Basically, there are 3 types of corrections that we have talked about. The zigzag correction, that's number 1. Then number 2, we have talked about the flat corrections, which are subdivided into 3 types. You can go, if you check the orb on the WhatsApp orb, I sent the link. Anybody can just go there and read this thing again. When you now understand corrective wave pattern, then you now understand fully what really happens in Forex market and how it behaves like that. It's not as if they are trying to shortchange you or they are trying to play you. It will look as if they are playing you because you don't really have the knowledge. So when you have the knowledge, you now know how to approach the market. So like I said, my online training today, you can equally call it no more pain. No more pain in the sense that when you understand Forex and the wave and some important levels, then you will see things more clearly. Now, I have in front of me pound dollar, so JBP USD. So I really want you to also go through this video and watch over and over and over. When you are doing analysis and you are looking at this analysis, you can tell yourself, oh, I think, oh, this trade has been selling. If you move from where I have my cursor down, you tell yourself, oh, this trade actually has been selling. And now this one is doing a pullback. If that is what you think, if you think that this thing is pulling back, so you are expecting a pullback, you think that, okay, it won't pull up to this level because it's doing a pullback and the price is going down. If you watch from here, okay, the thing did this and it was never up to this level where it was coming from here. Let me just try to zoom out. So the price was coming out from here. So it's been constantly going down. So the price did this and, did this pullback, did this again, move this way, did this again, move this way. So the thing was actually staying in the middle and it's like it's going back. And you are expecting that this price that is moving now will never get to this point, but from this point, it's going to go down. You are missing the point. That is not going to happen. That is not how we trade. That is not what it looks like. But you are looking at a structure on 4 hour and you think, oh, that is the way it's going to be. And you are telling yourself, okay, this 50 AMA has been playing like a resistance here. So a resistance here. So it's going to act like a resistance here. So you expect that the price is not going to go over this place and it's going to fall below it. It's a lie. You'll be surprised that this particular way that is coming can get to this point and move higher beyond this level. And even higher and higher and higher than that level. Then you now tell yourself, what is happening? Has the trend changed? The trend has not changed. Even with that, let this thing go like 3 times up. The trend has not changed. And we are going to see that exactly. How do we first look at and how do we first approach looking at the chart? Let's go to what? Let's go to, I like to take it from, you can see the candle, I like to take it from the weekly. So we first go to the weekly. You guys, you know what to do. You know what to do. What to do is that once we are logged out, and we are going to log in again, and that's just it. Just go back and log in again. Once it's 40 minutes of thereabout, we're going to be logged out, but we click again to come in. Now, all of a sudden, I changed to what? I changed to weekly chart. Then it looked as if what has been happening is that, okay, the trade has been doing what? Has been buying. And the sell, your sell position has disappeared. Then you are not confused. So you now think that, oh, the sell position has disappeared. So now we are on uptrend. So you are now interpreting that, okay, this EMA 50 has been serving as what? As what do you call it? As a resistance here. So the price is now here. So it's going to be a resistance. So it's going to be going up and up and up. So the price is not going to fall. You are missing the point. You are missing the point. So you are as good as your knowledge. Now, what do we do? I'm going to zoom out completely to see what this chart has been doing. That's the best way, and that's the best approach. Okay, so let's zoom out completely. Let's zoom out completely. Let's zoom out completely. This is what is happening. This is the chart. Now, looking at this chart, what we can tell ourselves is that this chart is actually in a downtrend, not an uptrend. This chart is actually in a downtrend. Now, looking at this chart in a downtrend, there are so many things that we tell ourselves that will happen, because wave will always complete itself on a yearly cycle, on a monthly cycle, on a weekly cycle, on a 4-hourly cycle. The modern wave study had shown us that on a bigger picture, we more or less see a 3-wave structure and not a 5-wave structure that the Elliott had said. We more or less see a 3-wave structure that it's like an ABC or like a complex correction. Now, I want your perception to change henceforth. When we add a move from here down to here, this is a sharp move, and that is an impulsive wave, which, of course, you can find Elliott 1 to 5 within. So when you have this impulsive wave and a movement, the next thing that you see is a correction. And here, within this zone, you can see my cursor. Within this zone, This zone is a correction for this wave. For this down wave to this point, we had a correction of it here. And that is why I tell us that when we have an impulsive wave is short-lived, but the correction can take a whole year or more. So let's look at this wave here. The wave started here, October 2007, and it ended here, October 2007, and it ended in 2009, February 2009. So in less than 2 years, or about a year and a half, we had this big wave. And I hope you can hear me and see what I'm trying to show. About a year and a half, we had that move, a sharp move downward. Now, see the correction started from here also. From that February till around this area, around February 2009 till here, 2015, April 2015, 6 years, if I'm correct. A movement of 1.5 years, a correction of 6 years. And that is what always happens. You wouldn't expect it to continue falling and falling. No, that is what always happens. A movement of 1.5 years, a correction of 6 years. Then we now have another sharp move from here down to this place. So that's another sharp move from here down to this place. And if I show you something, this move, what you add in this space is almost similar to what you are having in this place. Is almost similar. And that is the way Forex is. So the correction we are having here is also similar to the correction we are having. So the correction here now is to this wave from here down here, we are having a correction to that wave. So when you now begin to see analysis from that angle, then you now understand what exactly is happening. Before you can say that, oh, there is a change in trend on a bigger time frame, a change in trend to the upside, then this particular correction must have taken itself beyond 61.8 fib retracement of this particular move, beyond it. If it gets stuck at 61.8 fib and begins to go down, that means you have not changed the trend. Now, let's now confine ourselves within this structure that we have seen presently, within this correction of this wave. Now, let me show us something, that when you add this move from here down to this place, 61%, 61.8 fib retracement of that move. So we take it from up here down to its tip at this point. The tip is here at this point. I'm not using this particular one, it's this one, but for me to see, so you can see. So my 61.8 retracement, let me tell you where it's going to rest. My 61.8 retracement rest exactly here at that level. Okay, at that level. So you will see that for pounds dollar, this correction was never up to 61.8. Far from it. Far from it. Far from it. Far, far from it. So now we talked about a correction. We said the kind of correction we can have, because most of the time we actually trade corrections. Most of the time we trade correction. But within corrections, of course, you can still have Elliott wave 1 to 5. Within corrections, we can have Elliott wave 1 to 5. But most of the time, correction is 3 waves. So when you now see correction as 3 waves, Now you will now see that this is like a wave 1 here. This correction from here down to this place is wave 1. From here down to this place is wave 2. And to this place is wave 3. So when you look at this as a whole, this one is looking like a flat correction. What kind of flat correction is this? Now, let me show you something to tell you the kind of flat correction that it looks like from what I've taught you. Now, looking at this, the thing played between this place and this place. So this wave moved from here to here. So we can call that this wave, because I want to be as precise as possible now. So this is a complex correction that we call WXY correction. This is WXY correction. So where we have this wave 1 as our W, is a complex correction. Is a complex correction. That's the wave here. That's our W. And we now have another wave that went down, which is the second wave down, which is an X, which is an X. That wave is an X. That's an X. We now have the last wave, which is a Y, WXY. That is what we are dealing with at the moment. We are dealing with a WXY. We are dealing with a WXY. When you understand this, the way and your approach will change. Now, we said this is a WXY wave. Wave 1, wave 2, and wave 3. It's a WXY wave. But again, we see it as a complex correction if you look at it. Now, in a regular flat correction, you are going to look at this wave that is going up here in comparison to this W wave. In a regular flat correction, what we expect is that the Y wave will never get to this. Actually, the Y wave will stop at about 78. It does not go above 80 or 90 retracement of this wave. That is what a regular flat is. And so it does not go beyond 80 to 90 retracement of this particular wave. And that's number one. Number two, it can shoot below it. So do we have a regular wave in the making? Then it can be a running flat. In a running flat, this wave is going to overshoot this one up by an extension of 1.2 to 1.3, but not exceeding an extension of 1.4. If it's going to go above it as a running flat. So in a running flat,
this is going to go above wave Y, and of course, in a running flat, extended flat, I'm talking of an extended flat, is going to go above with Y, and it's going to go below it. So the leg here looks pretty much like that of what an extended flat or a regular flat. What will now differentiate extended flat from a regular flat is when this wave goes above the level of Y here, or W here, then we now know, oh, we are actually dealing with what an extended flat. But now it still looks so much like a regular flat. Now, the last of the flat is the running flat. In a running flat, you can have this go beyond with Y or W hop here, but usually it does not get below W. It will float up. It won't get below it. It will float up, but it will exceed W. So that is the way we look at all these waves. But what I can tell you clearly is that we are playing within WXY correction. And this correction is not up to 61.8 fib retracement of this wave to here. Now, the trend to the upside, to the downside has not changed. Not until we go beyond this level that we say now the trend finally has changed to the upside. Then when that trend changed to the upside, you first have to overcome this one before you think of overcoming this one. That is how to look at direction of. Now, how do we now do this? Is it that we are having a change of uptrend that within this correction of this wave X to Y, do we have a change to the downside for now, or that is a correction that is going to go further up? That is what we want to see. And that is what I want you to follow me. Now, how do we engage this? The only way I can engage this is I've got to draw a trend line from here up and see if anything is happening. This is the weekly chart, please. Just follow me. It's a weekly chart. So I've got to pick from the tip here, and I will take it up to that side. If I take it up, if you don't watch my sections, you won't understand how I explain things and what I'm trying to do. So, because it's a bullish trend. So now I have this. That is the first way to look at it. Now, all of a sudden, it's becoming clearer to me that now there is a shift downward. There is a shift downward. And with this shift downward, I can see that the trend line has been crossed. So the momentum for now is downward within this corrective pattern. We are not going up anymore, but not now. And this down move that I'm looking at might take us another 6 months. This wave to this level started from here, March 2020, and we got to this peak here, May 21. From March, that is over a year. At least we want to see what is going to happen to this downside in the next 6 months. So we are making a projection, and that is the power of wave analysis. We are making a projection that we are going to be in this down wave for at least another 6 months. Now, with this, the first thing to do is that at least we expect that for any wave recovery in any form of retracement, where we want to stay first is a retracement at 61.8 fib. So every trader that is wise, we want to target a retracement of 61.8 fib. If the big players now try to take it beyond 61.8 fib to 100 to 78, we will see. But of course, we are telling ourselves this thing will do at least 61.8 fib of this move. So what do I do? How do I get a 61.8 fib of this move? Just watch me. We are still doing analysis on weekly. I take my fib. Because I'm doing a retracement, I start from the tip below here, the very tip, and take it up to this level. Now, my 61.8 fib, it's actually around here, where my hand is, my finger is. So let me pick something, a 2 for 61.8 fib. And let me come right in there. Okay, that's 61.8 fib. I'm going to change this color. So I'm going to change it to that. So, or let me change it to something you can see very well. Good. So that's 61.8 fib retracement. So what we are telling ourselves is that we expect that this move is going to come within a space of 61.8 fib. Again, for somebody who wants to be very much careful, we can just have a zone of between 51 and 50, 61.8 and 50. So let me put 50 also there. And you will see that is exactly how this thing is going to play out. So let me take 50 and put 50 also there. 50 is exactly here. What this means is that as soon as we will continue to sell, and we'll begin to watch a price action around here for a change of trend or a continuation to the downside. That is the meaning. But we expect at least this trend that is coming down is going to move towards this zone before we begin to see any price action that want to take it back to the upside or they want to go down. But because we know this thing has been a downtrend, we'll continue to watch. But of course, trend can still come back and break the top here if it's an extended flat. The mere fact that it's break this top here and it's gone beyond W here does not mean that they are going to go up. And that is the power of wave analysis that, oh, it's just a running flat. I expect a running flat to break the top. And by how much is it going to break the top? You have to know the wave that you are comparing it to be able to calculate the extension of the breaking of the top. It's as simple as that. But if you don't know the wave you are comparing it to, so you won't know to what extension. It's because you don't know when, even within the 4-hour time frame analysis or 1-hour time frame analysis, and you are having a extended flat, and you don't know where it's going to break to, it will be as if they are just using a week to knock you out, and you say, "Oh, they are more. They are doing it deliberately." No, it's the structure is looking like a running flat, or is between expanded flat and a regular flat, and all of a sudden the regular flat can change to an expanded flat because with this tail here, this tail has overshoot the boundary of the W wave, and that is looking like, okay, it could be a regular flat that you expect this rate to shoot down, or expanded flat. But by the time this one goes beyond here, then it knocks out regular flat and makes it what? An expanded flat. And when you have that, because it has overshoot this boundary, it can never be a running flat because this one has gone down. From what I can see here, it can never be a running flat. So we are looking at possibilities. But for now, we are looking at what the trade is going to do here. So we are in the downtrend for now, and this is our destination. Now, looking at this wave, the way it's coming down, do you think because it has changed, it's going to continue to drop and drop and drop and drop here? It's a lie. It's a lie. And that is where it gets interesting for anybody to know that, okay, I can, is it here? Can I continue to sell here and proceed here? This price is eventually going to get to this zone, but not now. And the price, is it trying to move back up now to do a pullback? So now that we have confirmed that the direction is down, so we will be having a pullback up. Now that pullback, is it 50 pips that you expect? The pullback can go 200, 400 pips. That is exactly how delicate and how it can be when you are not looking at the big picture. Now, for us now to see very well now, we know ultimately within the next 6 months, we are shutting down to get to this zone. So let me now extend this. So with this extension, so you can see that properly you have this, and this trend has been broken. So how do I engage this? If I know the kind of wave that is forming here, what kind of wave am I looking at here? Am I seeing this as a first wave? Of an impulsive move? Is it a first wave? Am I seeing that as a first wave? And am I seeing the counter wave as wave 2? Am I seeing the counter wave as wave 2? Am I seeing this counter wave as wave 2? Just hold on for me and begin to see. I want you to see what I'm doing. So, because we are coming down, the wave 1 ends around this point. Around that point. Around that point. So is it, this is wave 2, that is a pullback here. Now, with that, are we trying to set up for wave 3 to the downside? Are we trying to set up for the wave 3 to the downside? I want you to watch me. Now, we know that if that is what we are looking at, if this had gone up and this is a correction, what kind of correction am I looking at here? The way we have those flat correction now, if you break this one to the daily candle and the 4-hourly candle, you now be seeing those corrections, like I said, WXY, in that region as well. Now, if here is where you have the first descent before you begin to have correction, that is a bullish move here. So let's see if it's within what the Fib ratio agrees with. From here down here, if it's wave 2, we don't expect wave 2 beyond 61.8 Fib. So let me pick a Fib analysis. Let me just put where I expect my 61.8 Fib is there. My 61.8 actually is here. That is where my 61.8 is, at that level. Let me use something else to change it. Because I'm now using a smaller time frame for us to differentiate. So my 61.8 fib should be around that area. If it's wave 2, but for now, we have not started wave 3. If we have, okay, let me just, did I change this? Or I didn't just change it. Wave 3. We have not started wave 3 because wave 3 is going to take us far. If we're in wave 3, then I would have known. This is not like a wave 3 move. A wave 3 is impulsive. You're going to be seeing big, big candles coming down. So we are still within what? We are still within wave 1 here. So I can still take this one down to this point. So where I measured it is not correct. So I can still say we are within wave 1 because wave on a big time frame. So if I was still within wave 1, so I'm going to change my fib so you can see. Let me take my fib retracement stuff and let's take it from that place down to this place. So with that, now 61.8 fib should be around this area. So that is now settled. So you can see how perfectly it has laid itself that now this is wave 1, which ended here. And we've had a pullback of wave 2 in a minor degree around this area. So what we are telling ourselves is that we don't expect wave 2 to extend beyond this line anymore. So no matter whatever happens, if we're going to buy, the maximum place that we expect this wave to get to buying is at 1.40095. I want you to listen and watch carefully. If we are going to have anything to go beyond here, which is possible, if you know wave 1 to wave 2 in terms of a retracement, we say that most of the time, wave 2 will retrace within 61.8 fib of wave 1, but it can get to 78.2 fib retracement and not more than that. And when that happens, then it will not give you a regular flat correction, and that makes it an extended flat correction. And that is why it can get to 78. So in our attempt also to look for stop loss, you must know this thing at the back of your mind that even though the probably place that we're expecting the thing to get to is this level, but it can extend. So with that at the back of our mind, let me now take my retracement tool and come back to it. Everything is laying perfectly. And let me pick my 78. My 78 will actually be here. Let me use something for it, red. So my 78 will be here. That is what I would do. In case I decide to begin to sell from here, I'm telling myself, trade can still come to this area. I might only put my stop loss 15 pips above here if I want to sell. But for now, we are still having a correction and a pushback upward. So this thing is going to be going up and going up to this zone. And it can get to this zone. So between me and you, if I want to trade this, where do I think that I should trade this thing to get out and maximally take a profit? Now let's get there. I would take, I'm working within wave 2 now. I'm working within wave 2 that is pulling back. So because I'm working within wave 2 that is pulling back, I can take this. It's better for me to work with some 60, the level of 61.8, take this thing backward here, and tell myself I'm looking at my TP at between 61.8 fib and 78.6 fib retracement, which is at this level. So if I take that, so let me now change the color of expected TP. Let me use this, and let me use this. Let me use that. So let me take this off. You are seeing the way I'm doing my analysis. Now I'm expecting my TP1 here and my TP2 here. And so I expect that TP, at least the second TP will get at least at 39224 before we see any bearish move again. And I tell myself, of course, that it can get to 61.8 fib here. But I don't want to gamble. To be reasonable, I'll be working within this zone and watch for price action around here to know when to begin to sell downward again. Now, I know that we're going to move up for now and we're not going down? That is the question you should have asked me. This candle action, you can see on the weekly price action, this is weekly candle. You can see this move. It's an hammer. So, and the week is ending this way to tell me that there is a pressure from the bulls to take the price up. So they are going to do a pullback. So now during a pullback, what we tell ourselves in the kindergarten school is that the first place to expect that you are going to get out on a bigger time frame, it's the particular resistance where the price broke away from. So we are going to see this engulfing candle that broke away from my fib retracement of 61.8, and that's the first place I will look at my TP. It will get there. There's no way. No Jupiter will change that. Price will get here. Price will get here. And because in this kind of a formation of correction, we can have an 100% retracement is what will take price beyond 78 and take it to this level of 100, which is what a 61.8 fib of the entire run from here to this point. I think it's getting more interesting and more clearer now. So we can see that, fine, we are going down, and this thing has broken. This particular thing broke here. Then again, we tell ourselves, if this engulfing candle broke down here, where is the nearest resistance to this engulfing candle that broke? It is this point here. So you can see the wick align here and align here. So that's the nearest resistance to it. So in the future, we don't expect price to break beyond it. If it does, that means we are talking of what? Extended flat, an expanded flat. Then we cannot calculate at what fib ratio will give us 1.2 or 1.4 extension beyond this line, so we can calculate that probably it's going to be around this level here, maybe, because it's going to be an extension of this one, not the old run, not the old move, because now we are confined our operation within this wave 2 that is still doing its own correction. That is how to trade, really. That is how to trade, really. So now, if we now take it down to the lower time frame, let's now take it down to the lower time frame, to the daily time frame now, with what we are seeing